Homeowners insurance is supposed to protect you, but it's surprisingly easy to over-insure your home and end up paying too much for coverage you don't actually need. Insurance companies will happily sell you more coverage than is necessary, but if you could never actually benefit from the coverage, why pay more in the premiums? Let's break down a few of the common ways people over-insure their homes. The first common way people over-insure their homes is to insure it for market value instead of rebuild cost. Your insurance is supposed to cover the cost to rebuild your home, not what it would sell for on Zillow. If your home is worth $600,000, but it would only cost $400,000 to rebuild, you're paying an extra $200,000 of coverage you don't need and would never actually benefit from in a disaster. Remember that the insurance company isn't buying your home if it is wiped out in a wildfire. They're rebuilding it. Ask your independent insurance agent how your insurance policy calculates your home's value. Make sure it's based on rebuild cost, not market value. The second way you could be over-insuring your home is by overestimating the cost of building materials. Insurance companies don't always get the details right. If your application lists premium materials like hardwood floors, marble countertops, and custom finishes, when you actually have builder-grade basics, they'll inflate your rebuild costs. When it's time to replace your home, they will replace it with what you had, not for the materials you wish it had been built with. Review your policy and update any assumptions about your home's finishes. This alone could shave hundreds off your annual premium. The third way you could be over-insuring your home is by paying for add-ons you don't need and maybe will actually never use. A lot of homeowners are paying for coverage they didn't even realize they had, like identity theft protection, water backup, or home business endorsements. And sometimes those protections are already included somewhere else, like through your credit card or bank. If you have several riders on your policy, it's even possible that they overlap. You could be paying for the same coverage twice. Check your declarations page and compare it to what other services you already have. If something is redundant, cut it out. The fourth way you could be over-insuring your home is by carrying too much personal property coverage. Most policies automatically include personal property coverage equal to about 50 to 70% of your home's insured value. But if you're not a big spender or a collector, that might be way more than you need. If your policy insures your belongings for actual value, you could actually be underinsured. You want to make sure that you're insured for the replacement value of your belongings, but not for a level that far exceeds the belongings you have. If you don't have a lot of stuff, you don't want to pay the premium as though you did. Do a quick home inventory. Add up the value of your stuff. If it's nowhere close to what you're paying for, adjust it down. And here's an extra tip. When you do that inventory, take pictures of every room in your house so you have a clear documentation of what needs to be replaced if you need to file a claim. The fifth way you might be over-insuring your home is by having a deductible that's too low. Having a low deductible feels like a safety net. After all, you would be able to be covered for small events. But small deductibles can be less useful than it sounds. Filing claims for small issues might save you only a little bit of money in the short term. Over the long term, it could cost you money in the form of rising premiums. You can lower your premiums by raising your deductible. Raise your deductible to the highest amount you feel comfortable paying out of pocket. Use your policy to pay for big things, not every little repair. Before I give you one more tip that can save you from over-insuring your home, hit that like button and subscribe if you're finding this interesting. It helps the channel out, and we really appreciate it. Here's the last one, and it might surprise you. Some insurance companies quietly increase your dwelling coverage at each renewal, often under the label of inflation protection. Many companies raise prices in anticipation of future inflation. Covering real inflation is legitimate. You just don't want to pay for inflation before it happens, and if it happens at all. Review your dwelling limit every year. Ask for a fresh rebuild cost estimate before you renew. Let's sum up. Your home might be over-insured if your coverage is based on market value instead of rebuild cost. If it assumes your home was built with luxury materials you don't have. if you're paying for add-ons you don't use, if your personal property limit is too high, or your deductible is too low for how you actually use your insurance. But you don't have to figure this out on your own. That's why we recommend using an independent insurance agent. They can look at your current coverage and tell you exactly where you're overpaying and where you're underprotected. If you want to find an independent insurance agent that specializes in your state, visit the Yukon project. Our partner has a relationship with over 200 insurance companies. They live and breathe insurance. They can help you find the right carrier, the right coverage, the right discounts, and the right price. And if you ever need to file a claim, they can help you walk through the process. Signing up for a consultation only takes a couple of minutes. It's free to get connected, and if they can't help you out by saving you money or improving your coverage, there's no pressure to switch. Thanks for watching. If you found this video helpful, please like it and drop us a comment. And subscribe for more tips to save money on insurance. Thanks for watching.